What's up, my fellow iguanas? Iggy here from the Investing Iguana. In today's video, we're going to dive into the juicy world of Singapore's top dividend stocks. You'll learn which companies are dishing out the fattest dividend payouts and how to spot the real winners from the pretenders. But that's not all. I'll also share my personal tips on what to look for when picking a dividend stock. It's like having an insider trading on your side, except totally legal and approved by the authorities. So get ready to up your dividend game and start raking in that sweet passive income. Singapore, known for its robust economy and stable financial market, is the domicile of numerous companies that have a long history of rewarding their shareholders with consistent dividends. Among these, some have stood out for their reliability in maintaining a steady stream of dividends for over 10 years. One such company is Singapore Exchange Limited, the very platform that hosts the country's public companies. It has not only been a profitable venture in itself, but has also been a regular dividend payer, making it a favorite among income-focused investors. Another notable mention is Boasted Singapore Limited, a global service provider of infrastructure-related engineering services and geospatial technology. Its diverse business segments and global reach have allowed it to maintain a steady income stream and, consequently, a consistent dividend payout. OCBC Ltd., one of the leading banks in Singapore, also makes the list with its strong financial performance and commitment to returning capital to shareholders. Despite the generally volatile nature of the banking industry, OCBC has managed to uphold a stable dividend policy. Lastly, Raffles Medical Group, a leading private healthcare provider in Asia, has shown resilience in its business model, allowing it to pay dividends consistently. Its wide range of services, from family medicine to specialized surgeries, provides a stable revenue base, supporting its dividend payments. Here is my analysis on some of Singapore's top dividend stocks, explained in an easy-to-understand way. DBS Group Holdings, the banking giant. DBS, a banking giant not only in Singapore but also across Asia, has earned the title of the world's best bank on multiple occasions. This prestigious recognition has been bestowed upon it by renowned finance publications such as Euromoney and Global Finance. The bank's success can be attributed to its forward-thinking approach and commitment to innovation. DBS is heavily investing in technology with a vision to transform itself into an AI-powered digital bank of the future. To put it simply, DBS is akin to the tech-savvy trendsetter who is always one step ahead of everyone else. It is harnessing the power of cutting-edge technology to revolutionize the banking experience, making it smarter, faster, and more convenient for its customers. This technological prowess allows DBS to attract a growing customer base, thereby boosting its profits year after year. For investors, this translates into a consistent increase in dividends. In 2023, DBS paid out dividends amounting to $1.92 per share. Following a bonus share issue, the bank plans to raise this figure to $2.16 per share in the future. This proposed increase represents a substantial dividend hike of 24%. In essence, DBS is not just a bank, it's a tech-forward institution that is shaping the future of banking. Its consistent performance and commitment to shareholder value make it a potentially attractive investment option. The bank's strategic investments in technology and AI position it well to navigate the digital future and continue its growth trajectory. This, coupled with its consistent dividend payouts, underscores DBS's appeal to investors seeking both growth and income. Aztech Global's high yields and growth. Aztech is a dynamic and rapidly expanding company that specializes in the design and manufacture of electronic products. Despite being relatively smaller in size, it has managed to carve out a significant presence in the market. One of the key highlights of Aztech is its impressive dividend yield, which is one of the highest on the Singapore Exchange, SGX, standing at around 10%. In the most recent quarter, Aztech demonstrated robust performance, with its profits soaring by nearly 19%. This strong financial performance enabled the company to increase its dividend payout for the entire year, further enhancing its appeal to income-focused investors. Aztech's product portfolio is diverse and innovative, featuring items such as smart baby monitors, health wearables, and AI-powered kitchen gadgets. The company's ability to consistently launch new and cutting-edge products that resonate with customers is reminiscent of a top-performing student who continually excels in academics. This innovative approach allows Aztech to boost its sales, profits, and dividends at a rapid pace, thereby delivering value to its shareholders. However, like any other company operating in a globalized economy, Aztech is not immune to challenges. It faces potential hurdles such as supply chain disruptions and currency fluctuations, which could impact its growth trajectory. These challenges require strategic planning and adept management to navigate successfully. Despite these challenges, Aztech appears to be a compelling investment proposition. Its high dividend yield combined with its strong growth prospects positions it as a high-yield, high-growth stock. Therefore, for investors seeking both income and growth, Aztech could be a company worth considering. YHI International, the diversified player. YHI International is a company that has strategically positioned itself in the global market with a dual focus on both manufacturing and distribution. It's akin to a multi-talented individual who excels in various fields, thereby not relying on a single skill set for success. In the manufacturing realm, YHI specializes in the production of alloy wheels, a critical component in the automotive industry. This aspect of their business is comparable to a student who excels in a particular sport, demonstrating proficiency and competitiveness. On the other hand, YHI also operates as a global distributor of automotive and industrial products. This facet of their operations is similar to the same student participating in various activities, showcasing versatility and adaptability. The company's distribution network spans over 100 countries, representing top brands in the automotive and industrial sectors. This wide reach allows YHI to tap into multiple markets, thereby creating numerous revenue streams. This diversified business model provides YHI with a level of stability, as it is not overly reliant on a single source of income. Furthermore, it opens up a plethora of growth opportunities. For instance, the company's manufacturing facilities are well equipped to cater to the increasing demand for alloy wheels. Simultaneously, its extensive distribution network provides access to markets worldwide. Investing in YHI offers exposure to both the automotive and industrial sectors thanks to its broad range of businesses and products. While the company may not offer a super high dividend yield, it is a consistent dividend payer. This consistency, coupled with its diversified operations, makes YHI a potentially attractive investment option. Picking dividend stocks. When it comes to selecting dividend stocks, there are several crucial factors to consider. These factors serve as a guide to help investors make informed decisions and maximize their returns. The first factor is the dividend yield. This is a financial ratio that shows how much a company returns to its shareholders in the form of dividends relative to its market price. While a higher dividend yield is generally more attractive, investors should be cautious of yields that are abnormally high, as they could be a sign of financial distress in the company. Next is the payout ratio, which indicates the proportion of a company's earnings that is distributed as dividends. A payout ratio of around 40 to 50% is generally considered sustainable, as it suggests that the company retains a sufficient portion of its earnings for reinvestment or to cover any unexpected costs. The third factor to consider is dividend growth. Investors should look for companies that have a history of consistently increasing their dividends over time. This is a sign of a company's financial health and its commitment to returning capital to shareholders. Financial health is another critical factor. Investors should look for companies with strong profits, positive cash flows, and low debt levels. These are indicators of a company's ability to sustain its dividend payments over the long term. Understanding the future prospects of the company and its industry is also essential. Investors should consider the company's growth potential and whether it can continue to perform well in the future. Lastly, the size of the company plays a role in dividend reliability. Larger, more established companies tend to be more stable and are often more reliable dividend payers. There you have it, iguanas, my full breakdown of Singapore's best dividend stocks and how to pick them like a pro. Remember, don't just chase high yields blindly. Always look at the bigger picture, the company's financials, growth prospects, and dividend sustainability. That's the key to building a rock-solid dividend portfolio that keeps pumping out cash year after year. Pretty neat, right? If you found this video insightful, do me a solid and smash that like button. It really helps a lizard out, and if you haven't already, hit that subscribe button and ring the bell. That way, you'll never miss another hot investing tip from yours truly. Thanks for watching, iguanas, and I'll catch you next time for more fantastic content.